Hello everyone, welcome to Study IQ. So in this video, I will bring to you a very important topic, especially if you are preparing for banking exams like any PO, clerk, specialist officer or any higher exams like RBI, grade B or assistant. In this video, I will teach you the Banking Laws Amendment Bill. So let us try to study it through the help of a question. Government has passed the Banking Laws Amendment Bill 2024 in the Lok Sabha that brings about changes to 5 banking laws. The bill proposes to increase the tenure of the directors. We are not including chairman and whole-time director, but other directors in the cooperative bank from 8 years to how many years? So the tenure of the directors of the cooperative banks, excluding the chairman and whole-time director, so their tenure will be increased from 8 years now to 10 years. So the answer is option B. The answer is option B. So Banking Laws Amendment Bill, basically it has multiple jobs. As per Nirmala Sitharaman, the new Banking Laws Amendment Bill, it will strengthen the bank governance, provide consistency in reporting by the banks to the RBI, ensure better protection for depositors, improve the audit quality in the public sector bank, and it will also increase the tenure of the directors other than the chairperson and full-time directors in the cooperative banks, as I said, from 8 years to 10 years. Now this is very important. There are amendments because of this new bill, which will soon become a law, an act. There are amendments which are done in the old bills, old acts. So total, how many amendments are there? This is a good MCQ. 19 amendments have been made total. Okay, through this bill, total 19 amendments have been made. Now these 19 amendments, they have been made in which act? So RBI Act 1934, 1 amendment. Banking Regulation Act of 1949, 12 amendments. So maximum amendments are made in the Banking Regulation Act of 1949. State Bank of India Act of 1955, there are 2 amendments. Banking Companies Acquisition and Transfer of Undertakings Act 1970 and Banking Companies Acquisition and Transfer of Undertakings Act of 1978. There are 2 acts apiece, right? 2 each. So how many amendments? Total 19 amendments they have been made. And I will tell you in detail. Don't worry, I will explain this Banking Laws Amendment Bill in a lot of detail. So let's start. One of the most important change is that now the bank account holders, they can have up to 4 nominees in your account. What is the meaning of this? And look, this nomination can be successive or it can be simultaneous. So it will offer you lot of flexibility, right? Let me explain what is the meaning of this. Now let us say you have a savings account in any bank, let's say HDFC Bank. So now you can have only one nominee. Okay, what is the meaning of one nominee? Let us say something happens to you, something bad happens to you, you die. Then what will happen? The money in your saving account will be used by the nominee. It will be given to the nominee. Let's say nominee is your wife. Okay. Now, but during COVID, what happened? I'm giving you one example. There can be multiple examples like that. So during COVID, for example, the husband and wife both passed away because of COVID. There were multiple casualties that happened in the COVID. Similarly, in a car accident, sometimes the entire family gets wiped out. There are cases, sometimes husband and wife are going in a car and they meet with an accident and both of them die. Then what will happen? Then there are problems. There are legal problems because a lot of people will come and have a claim over the money in the saving account. So what you can do now, you can have 4 nominee. Now let me explain how. So again, you have an account in HDFC Bank. This is you. Now you have 4 nominees, 1, 2, 3, 4. Okay. So first nominee you have said, okay, is my wife. Second will be my brother. Third will be my son. And fourth will be my daughter. These are your 4 nominee. So first and the most important thing in the Banking Laws Amendment Bill of 2024 is that instead of one nominee, the account holder can have up to 4 nominee. Okay, up to 4 nominee. And this nominee can be both simultaneous, that is your choice, or it can be successive. First, let me explain. Now it is up to you whether you want your nominees to be simultaneous or successive. What is successive? So successive means that, let's say if I die, then the first right will be of my wife. If my wife also dies, then the right will be of brother. Let's say if my brother is also not there, then son, and then daughter. So this is called successive nomination. Basically, you are saying first, second, third, and fourth, respectively. But first right will be of my wife. But let's say because of some problem, me and my wife, they both die. Then my brother can claim it. Can the son and daughter also claim? No. They come much later in the pecking order. So only when the brother is not there, then the right of son will come. And if son is not there, then the right of daughter will come. This is called successive. There is a hierarchy. Understood? This is called successive nomination. So it is up to you. You can do a successive nomination or you can do a simultaneous nomination. Simultaneous means together, meaning, so you tell a ratio. You will be asked, if you do a simultaneous nominee, then you will be asked the ratio. So you will say, okay, there is 25% for all the four. Meaning what? Meaning if you die, then the money in your saving account and of course your FD will be divided 25% each to all the four nominee. Here it is not like wife has the first right or brother has the second right, nothing like that. They all have the equal right. And it is not necessary that it is 25% each. You can set the ratio. For example, you can say my wife will receive 40%, my brother will receive 20%, okay, my son will receive 30%, and my daughter will receive 10%. So this ratio you have to decide. But there is no hierarchy. Okay, so this is called simultaneous nomination, right? So it will give you a lot of convenience, a lot of flexibility, right? A lot of safety. Your money will be safe. And one very important thing. What about the locker? What about the locker? Now this is very important. What about the locker? So there must be a lot of important things in your locker. There can be gold. You must have kept some gold jewelry or some sort of stuff there. You must have kept some important documents in your locker, right? Some gifts in your locker maybe. And these are the kind of things that people keep in their locker. What about that? Is for locker also for nominee is there? Yes, for locker also you can have for nominee. But the difference is that for a locker, it will be only successive nomination that is possible. You cannot have a simultaneous nomination for a locker. Why? I mean, it's very common sense, no? For example, let's say in locker, there is an important document. Okay, now you can't have simultaneous because you cannot tear this document into 4 pieces and give to every person, right? So in case of locker, this is an important MCQ. Yes, in case of your fixed deposit or saving account and all, yes, you can have successive or simultaneous. That is up to you. But in case of a locker, only successive nomination is possible. Simultaneous nomination is not possible. This is something that you have to fix in your brain. Okay. Now let us come to other provisions of, of this bill. That is the salary. The better word is remuneration of the auditors of the bank. Audit is you keep a track of how the bank is, faring. It's doing expenditure where, I mean, all that thing is called auditing. You see the balance sheets of the bank. Now, who decided the salary of the auditors, remuneration of the auditor? It was always the Reserve Bank of India in consultation with the central government, that is Government of India, right? But now, after passing of the Banking Laws Amendment Bill of 2024, because it is passed in the Lok Sabha and very soon it will be passed in the Rajya Sabha and it will become an act. So, Reserve Bank of India in consultation with the Government of India used to decide the remuneration paid to the auditors of the bank. But now banks will be able to decide it themselves, right? So the bill will empower the banks to decide the remuneration of their auditors. That is another provision of the bill. Change the definition of the fortnight. Now you know that banks, they need to maintain cash reserve ratio with the Reserve Bank of India, right? It is 4%. Earlier it was 4.5. Recently only it has been slashed from 4.5 to 4%. So this 4%, do they need to keep it daily? No, it is like fortnightly. So the average balance that they have in a 14 days time, a fortnightly as we call it, and they take the average of that and they calculate 4% of that. Their net demand and time liabilities, 4% of that. So daily it is very cumbersome process. So what banks did was they used to calculate it fortnightly basis and then submit to the RBI. Now the definition of the fortnight is changed. So what was fortnight earlier? Earlier it was Saturday to next Friday, including both days. Generally it is a 2 weeks period, right? So from Saturday, you leave the next Saturday. So the next Saturday that comes, the Friday before that, you include that. So from Saturday to the next Friday, including both days was the fortnight. But now they have changed the definition of the fortnight. So what is the definition of the fortnight now? It is the first day to the 15th day of each month and 16th day to the last day of each month, whichever that is, depending on whether it is a month with 30 days or 31 days. So that definition is changed. This is relatively a trivial point, but I mean, since we are studying it in detail, we should study all these things also. And of course, the tenure of the directors in cooperative banks, except the chairman and the whole-time director, so their tenure is now increased from 8 years to 10 years. 8 years and 10 years. Now let us talk about another facet of the bill, which is the prohibition on common directors in case of cooperative bank. What is the meaning of this? Let's say this is a person and this is bank number 1. I'm talking about cooperative bank, and this is cooperative bank number 2. These are two separate cooperative bank. Now one person, I repeat, one person cannot be appointed, cannot serve as a director in the board of two separate banks. Okay, so the Banking Regulation Act prohibits a person, prohibits a person who is a director on a bank's board to serve on the board of another bank. If he is a director on the board of bank 1, he cannot be on the board of the bank 2. But what does this bill do? This bill says that there is an exemption given to the central cooperative bank. So if there is a person, if this person, let's say if this person is on the board of a central cooperative bank, then he can simultaneously be on the board of a state cooperative bank. So this is what they have done. This is to ensure, because if same person, RBI says that if same person is on the board of a central cooperative bank and a state cooperative bank, this person can ensure a better coordination. So he is allowed. Otherwise it is not allowed. Only the director of a central cooperative bank can be simultaneously be on a board of a state cooperative bank. Otherwise, this thing was not allowed according to the old Banking Regulation Act. Right? Banking Regulation Act of 1949 prohibits a director on a bank's board to serve on the board of another bank. Also, one more thing here. If this person is appointed directly by the RBI on the board of a bank, then also he is exempted. So in two situations he is exempted. One, where he is a board of director in a central cooperative bank, he is allowed to be a board of director in a state cooperative bank to have better coordination. Number 1. Number 2, if he is appointed by the RBI. So if there is a cooperative bank on the board of this cooperative bank, a director is appointed by the RBI, then he is also exempted. Then he can also serve on, as a board member, as a board director in another bank. So in these two cases, there is exemption which is given. Number 1, exemption is given if there is a director appointed by the RBI. And second, the exemption is given to the director of a central cooperative bank. Now let us talk about another provision of the bill, which is substantial interest in a company. Substantial interest in a company. So let's say you are a person and you own some shares of the State Bank of India. Okay, it is a listed bank obviously. So you have purchased some shares of this bank, right? Now, when will we say that you have substantial interest in SBI? Substantial interest means what? Substantial interest means that if you are holding shares of SBI of over 5 lakh rupees, then you have substantial interest, or 10% of the paid up capital of the company, whichever is less. 10% of the paid up capital. Obviously 10% of the paid up capital of SBI is huge, but you can still own more than 5 lakh, the lesser of the two. So that is sufficient. So even if you own more than 5 lakh rupees of share of SBI, State Bank of India, or any bank for that matter, it is said that you have substantial interest. Okay. Now, and this bill, what does it do? This bill will amend this definition. So this 5 lakh rupee will be now 2 crore. So for having substantial interest, to qualify as substantial interest in a company, you need to own more than 2 crore rupees of shares of that company. Okay. So the bill amends the definition of substantial interest to 2 crore, more than 2 crore rupees, or more than 10% of paid up capital, whichever is less. That is also a very important point in the bill. Now let us come to another important concept, which is called IEPF. Now what is the meaning of this? So there is a fund that is managed by SEBI, Securities and Exchange Board of India. It is called IEPF, or Investor Education and Protection Fund. Investor Education and Protection Fund, IEPF. So what does the Banking Laws Amendment Bill of 2024 say? So it says that, let's say you have purchased shares of SBI or any company for that matter. Okay. Now they decide to give you a dividend. Okay. Dividend is what? Dividend is a part of the profit that is distributed among the shareholders. So let's say you purchase a share for 100 rupees and you will get 4 rupees dividend on it. But you have not claimed the dividend. Then what happens? Then it goes into a something known as unpaid dividend account. Unpaid dividend account. So if you had 10,000 shares of any company and 4 rupees is the dividend per share, so in a way you have made how much money? Well, you have made 40,000. 10,000 shares you had, 4 rupees per share is your earning. So 40,000 is the dividend amount, but you have not claimed it so far. So what will happen? It will go into a unclaimed dividend account. Now 7 years have passed. I repeat, 7 years have passed and you have not claimed, the money is lying here. Then it will get transferred after 7 years to IEPF, Investor Education and Protection Fund account. So any money which remains unpaid or unclaimed for a period of 7 years from the date of its transfer in the unpaid dividend account will go to the IEPF. Also, all the shares. Now what happens to these 10,000 shares? You have not claimed the dividend. So the corresponding shares will also go to IEPF. These 10,000 shares, right? 10,000 shares will also go here. What is the meaning of share going to IEPF? So 10,000 shares are here and price of one share is 100 rupee. So 10,000 into 100, that is 10 lakh rupee. 10 lakh rupee will also go in your IEPF, which is managed by SEBI. So all the shares in respect of which the dividend has been paid for a, and if it is not claimed for 7 years, will also go to IEPF. So that is also something that they say. Of course, you can always claim it back. You can always write to IEPF. There is a website also, iepf.gov.in, where you can claim it back. And IEPF is managed by IEPFA, Investor Education and Protection Fund Authority. IEPFA, which was set up in 2016. IEPFA was set up in 2016, right? Also, IEPF was set up under Section 125. IEPF, it was set up under Section 125 of the Companies Act of 2013. This can be a good MCQ question. Now, all the things that I have said about the Banking Laws Amendment Bill of 2024, I will sum it up in just 10 seconds. Okay, what are the changes? Number 1, substantial threshold. Substantial interest. If you have a substantial interest in a bank, earlier it was 5 lakh rupees or 10% of the paid up capital, whichever was lower. Now it is 2 crore minimum. If you have 2 crore worth of shares in any bank or any company, then we say it is substantial interest threshold. Then the director tenure for cooperative bank, except the chairman and the whole-time director. Earlier maximum was 8 years. Now it has been increased to 10 years. Okay. Then the fortnight definition. Earlier it was Saturday to the next Friday, including board day. Now it is 1st to 15th of the month and 16th to 31st of the month. This is for calculation of the cash reserve ratio. Then unclaimed fund. So earlier only the unpaid dividend, they were transferred to IEPF. Now the corresponding shares or even the non-redeemed debenture or bond will also go to the IEPF. And of course the nominee, earlier only one nominee was allowed. Now up to 4 nominees are allowed. Up to 4 nominees are allowed. So this is in very detail the Banking Laws Amendment Bill 2024. So that was the video for Banking Laws Amendment Bill. I hope you were able to understand the intricacies, the nuances of this bill. Very handy for your exams as well as for interviews. Keep checking Study IQ for more exciting videos. Thank you.